That as well spiking up in the last few minutes. Tushar Pradhan, though, Director of HXGON Partners, joins us on the show. Hi, Tushar. Good afternoon. Good to see you win, and season's greetings to you, your family, as well as your team. How are you feeling about the Indian markets, Tushar? You know, getting into that midweek holiday, the bulls were thumping the chest and they were like, all-time highs are here. Now that trade deal is not a done deal, and various pockets of the economy appear a little bit softish. Though the other, the bullish view is things are actually on the mend. How would you approach the Indian markets?
I think that's the consensus which is building up. And thank you very much for your wishes. The same to you, your families as well. What we are looking at is that we've had a very soft year from a market valuation perspective, in the sense that market not having gone anywhere, your earnings coming in at a relatively mild pace, it is actually coming back to fair value. And you have to remember that there's a shift happening globally where there appears to be an attraction for emerging markets. So if you've seen X of India, all the other emerging markets have posted upwards of 20% returns on an average. So the emerging market index is up almost 25% YTD. Now that does tell you that there is foreign interest in emerging markets. It hasn't trickled down to India, and that is partly because of the valuations that we had at the start of the year. I think with some adjustment in terms of what the valuation is and what the prospective year looks like, because the earnings season now is just getting started, and I think the next 2 quarters are going to be pretty significantly positive. If you put all of those two things together, I think there is reason to believe that the Indian markets can have a bit of a run because of the kind of earnings growth that we're expecting and the return of international investors back into Indian equities.
Tushar, when you speak to investors, are you sensing some sort of frustration, the fact that India is still not able to stitch a deal? You spoke about the outperformance, the interest of investors in other emerging markets. They've all outperformed. And it's been a long time, but we still haven't managed a deal. I mean, are you getting some sort of, are you sensing some sort of frustration that, on India, that India should have done something?
No, I think that is, I think something which most of the international observers, especially investors, have kind of taken in their stride, knowing that India has a lot of initiatives, it has a lot of priorities. So it is not a very bilateral thing to just enter into a trade deal, because we have to take care of so many issues which are so critical for our economy, and not only for this year, but going forward in the next 3, 4, 5 years. So I think everybody understands that the trade deal has to be discussed. It cannot be, pretty unilateral in a sense that let's go and do a deal, because there are so many things behind the scenes which have to actually put together before, any sort of contours to such a deal can happen. And I think most investors understand that. They may be frustrated by the number of months it has taken, because we were talking about this right at the start of the year. And it was very likely that India would have been the first among countries to have signed a deal. Maybe it is because of that expectation that the disappointment has been there. But I think now people are getting a better sense in terms of where we stand. And I think India's prospective chances of having a deal now much better than where they were at the middle of the year, because the geopolitics having been a little bit more on the milder side, I think there have been positive statements from each side coming through. I think there is a lot of positive expectation again building up, that not only in the speed in which the deal will happen, but it might be a bit of a win-win. I think the people have understood that this cannot be instantly done. They understand that even if there is a change in our view, it will happen over a period of time. And I think that is the biggest positive I've taken, that there has been some sort of acceptance of each of the sides' emergencies, or like I would say priorities. And I think there is a lot more positive news to expect in the next few months for us.
We hope so, Tushar, absolutely hope so. But going by the Commerce Minister's statements this morning in Berlin, things seem to be a little different, because he's again singling out, and I'm just reading out some more statements. We'll have more bites playing out in just a minute. He says that India looks long-term. It never takes decisions in rush or on the pressure of the moment. And he says that we don't think that we have ever decided who is our friend. based on any other consideration other than national interest. If someone tells me I can't be friends with the European Union, I won't accept that. So he's going on to talk about how this Russian oil issue is a global issue. And he says that we are all in it together. The decision to buy a particular product from a country is something the entire world will have to take a call on. Why single out India? So some pretty straight talk coming in from the Commerce Minister in Germany this morning. And we'll play more sound bites from that conversation in just a bit. But Tushar, coming back to earnings and the other side of the picture, so the India-US trade engagement is still kind of clouded, and we need to see how it resolves itself. But earnings and the first signs, say from financials at least, are fairly encouraging. Even FMCG companies are not reporting a very hot Q2, but they're all talking about a better second half. So just from an earnings growth perspective, which are the sectors or the pockets of the market where you are pinning your hopes for not just Q2, but the rest of the year?
I think pretty much the entire capital goods side, which was actually reeling from the fact that the ordering kind of, went a little bit soft. Many of the prices had gone a little ahead of the expected volume, which was to be expected from these bookings of the capital goods kind of sector. That took a bit of a breather. So I'm very, very confident that the second half is, first of all, going to be pretty significantly positive for capital goods. I also believe that financials, which have been again under a cloud for many reasons, will come roaring back for the same reason that the first 2 quarters have been a little soft in terms of the credit growth. But as we see, the 2 major imperatives that we currently have is to increase consumption and especially discretionary consumption. And the GST regulation change has come as a windfall for most of the discretionary consumption areas. And I think the banks and the financials will actually lead it because they're the ones who are actually going to finance or really bankroll, the increased consumption in the discretionary area. And then that will follow up with, the cars and obviously the discretionary goods, which will, again, I think by the end of the year, will come up with something really significant. If you are to go with any of the early polls which have been taken by some of the people around dealers, especially car dealers or even electronic goods, they're actually talking about a very, very significant upturn in terms of purchases across the board. Now, this can encompass even things such as payments, small transactions. You can even talk about personal finance, etc. So there's going to be a pretty significant surge in terms of volume of business going forward. And I think if we just put a finger on, 2 or 3 of these sectors, I think we'll get some very significant winners along the way.
Thank you very much for joining in, Tushar. Enjoy your weekend. Always great chatting with you. Now